You're listening to Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elkan, and we're joined by Gary Kaltbaum. He's the president of Kaltbaum Capital Management. Gary is a registered investment advisor with more than 30 years of experience in the markets. Gary, thank you so much for joining us today. How are you doing on this Wednesday morning?
Doing great. Pleasure to be here.
I think you had the best top list of topics that you were interested in going over that we've ever gotten on the show. So let's start with the Mets kicking ass.
I am a very psychotic New York Mets fan, so I'm finally having a less frustrating year. And let's hope as they get into the playoffs, they do some ripping. I think they have a very good team, and I think they got a very good chance this year, especially when you have a great pitching. So keeping fingers crossed.
And the reason you got a great team is because we gave you Jonas Cespedes for absolutely nothing, Gary. So you owe us on that one. He's a great hitter.
I had nothing to do with it, and I do not apologize.
Okay, all right.
But he is just he should probably get MVP if you ask me, because I think he single-handedly when he came over to the Mets, I think they were only like 3 up on 500, and I think they're 21 up now. So obviously he's doing something right.
Did you ever see the throw that he made from left field? I believe when he was with the A's, it bobbled in the corner. He went and he got it, and he threw a strike to the guy at home plate. Have you ever seen that clip?
I did not, but I'm writing it down right now so I can look at it later.
Oh, yeah, it's the best throw I've ever seen in my 51 years of watching baseball.
So you're telling me it was Roberto Clemente-like?
It was better than Roberto Clemente. I'm telling you, watch it, and then you send me an email and you tell me what you think.
Will do.
Gary, you also mentioned a couple of Democratic presidential candidates right now, and it's an interesting timing since we do have another GOP presidential debate coming up later tonight on CNN. What's your take on the elections right now, real quick?
I think it's probably the most interesting one we have seen in a very long time. It is amazing how, on the Republican side, the Tigers are trying to eat their young, and the fact that they're just trying to put Donald Trump out. And I think the voices are speaking louder and clearer. I've always had this big thing as far as politics. I think politics is about sales and marketing and how you sound and what kind of passion you have. And when I listen to Jeb Bush, I feel like I'm listening to my chemistry teacher in high school. And when I'm listening to Donald Trump, he sounds Tony Robbins-ish. Really with a lot of passion, a lot of what I call oomph, and I think that's what's selling right now, and I think others should learn a lesson, and they're not. They just keep putting them down. As far as the Democratic side, I don't even know what to say. You have a guy in Bernie Sanders that is attracting 20,000 people to stadiums, and his policies are basically the same policies that are going on in Venezuela right now that have just completely destroyed the country, yet people are listening. So that has me scratching my head, but we'll see how it goes. There's a long way to go at this point. And as far as Hillary, the first thing I taught my kids when they were old enough is never to lie. And the reason you tell them that is A, it's wrong. B, you're going to have to come up with another lie to cover it. C, somebody's going to find out. And then D, your reputation heads south. And once you do that, you're screwed. And if you look at her poll numbers on trust, it looks like she never had the talk when she was a kid. And I don't know how she comes back from this, but I think she's the only game in town. And again, we have a long way going.
Hey, that was a great summary of just what's going on across the board, and we like to mix it up on the show sometime. But let's get back to markets. And you're saying markets
you mean we can't talk more politics? Darn.
Just a little.
Go right ahead.
Markets. You think markets are still bearish?
Well, here's my take. Number one, you had a few months of a huge topping out process that culminated with that that turned out to be a big break on August 20th. I do believe that August 24th, that was that, I call it the scam low, because there were so many misprints and so many people screwed on that morning, and I still don't know why, but it was just a bad morning. I am pretty sure that, and I've been writing this, I started writing it the day after, I think it's a good low for now. It felt like the most panic I've seen in a very long time, one of the biggest washouts I've seen in a very long time. And what we have done since is drifted higher. I wrote last week, I think it was Tuesday, that I thought buyers finally had a little bit of the upper hand, and of course Wednesday we're up 200 and dropped 400, and I look like a doofus. But it does look like right now a little bit of buyers having the upper hand. Here's the problem. I am a technician first and foremost. I've studied every bull and bear market throughout history. You have massive, massive, massive overhead resistance coming up as we rally up, and I think that the market's going to have to deal with it in the next 2 to 4% if we continue to rally higher. I always put the disclaimer out right now. That said, we have never in our lifetime have dealt with central banks on the scale that they are involved in markets. You have China arresting people if they sell or if they just say anything bad about the markets. You have Europe and Japan printing $1 trillion plus each. You have 0% interest rates all over the globe, and everybody's having a fit right now about what our central bank's going to do tomorrow, when the worst thing they can possibly do is go from 0.25% up to 0.25%, which means nothing to the average American, may mean something to speculators. I don't know, but just the fact we are continue to be held hostage by these people just irritates the heck out of me.
Great point you make about the fact that it's like if they do make a rate hike, it's just such a small percentage point. I mean, honestly, couldn't it even be like good for them to make a rate hike because it means they have confidence in the economy?
Well, I have no confidence in anything the Fed does.
Oh.
Just so you know, they use the term data dependent.
Right.
Now, you know why they came up with data dependent, because they were so wrong in 07 and 08 about subprime. And I have all the quotes of Bernanke and Paulson and many others about everything was fine, everything's good. And they realized they were doofuses at that point, and they had to change their terminology. So now we'll wait for the numbers to come in before we decide, which is really stupid, because markets are the big forecast of the future, not what the Fed thinks. Look, I think they should have been raising rates a long time ago. I believe they have screwed the savers. There are no riskless income investments anymore that has forced savers to buy into junk bonds at ridiculous price and yield, amongst many other things that I'm finding out about. Private real estate investment trusts with 7% yields, 7% commissions, all kinds of crazy things. So I worry about at the end of the road that they've done nothing more than created another big bubble. Whether or not this is the big one, I don't know. I think we'll find out in the next few weeks, because if we rally up into moving averages and then just head south again, I'm going to use the term look out below. I don't know what to say about this Fed and what they're thinking, because I don't believe in rigging markets. I don't believe in manipulating markets. I believe markets should be based on the fear and greed of investors at a given price and at a given time, and the rest of the body should stay the hell out of the way. But unfortunately, we're now in this day and age where governments are neck deep in it, and I gather they're not going to get out of it. If I was running for president, the first thing on my platform, if I won, I would get rid of the Fed the next day, because I like markets to be free and let them do what they want to do. I don't need some ex-tenured professors coming out and manipulating things.
So, given all of these factors, what can the average investor even do right now? Should they just go to cash?
Well, look, here's the great news for the average investor. The markets are hardly down this year, even with all the big drop recently, and with all the wild swings. So that is very good news, considering, of course, if you bought about 3 weeks ago or 4 weeks ago, you're not exactly happy. We have not had a real bear market in 6 years because of central banks. We finally had a 10% correction recently. And if you noticed anything, I was just in Japan. All the talk in Asia is about how governments are going to save the markets. That's all pundits were talking about. And I'm just trying to think to myself, when have we gotten to this point? The best thing I can tell the individual investors, if the market's not working, get out. If your stock is not working, get out. You know, Wall Street is a fully invested vehicle, and you got to remember that in the last bear market went down 56%. Wall Street told you to stay in the whole time while you lost half your money. So I'm a big believer in watching the market, managing the market, and if things change, act accordingly. Unfortunately, most investors do not do their legwork. They do not do their homework, and when bear markets do hit, they suffer, and they suffer badly.
What about gold? Is it finally time for gold to shine?
It just hasn't happened. There's been no. I'm a big believer in show me, and gold continues to be the most talked about, gotta own investment out there, and I think it's going to have its day. I think all this printing of money ultimately leads to gold going much higher. It just hasn't happened yet. What I would say to people that aren't in gold, be happy that the GLD is down from 185 down to 105, so you are buying it much cheaper, but I can't tell you it's not going to go to 95 first before that turn. I don't own any right now, but I think ultimately there's going to be a big move to the upside. It just has not showed me anything yet.
Goldman Sachs last week calling for $20 oil. What do you think of that?
I don't listen to that. I don't believe in the big call. I don't believe in somebody when the Dow's at 14,000 saying it's going to 25,000. I don't believe in Harry Dent right now who's saying the Dow's going to 5,000, even though he's been saying it for 7,000 Dow points. I'm a big believer in you can get all the information you need out of the markets right now, and I kind of find it interesting that oil prices are down 60 some odd percent. Now they're making a big call that it's going to go much lower.
Right.
I'm not saying it isn't. I'm just saying I just don't believe in that. Oil is in a bear market. It's been going on for 14 months. The best thing I can tell you, it feels like that the last 3 or 4 weeks that prices for oil and a lot of the stocks, I think, have found a pretty decent low for now, but I'm not sure it's the low, and certainly there's not a lot of leadership at this point in time, and I would be underweight this second. Not a big fan. The areas I do like, I'm a big believer in relative strength. My favorite growth stock names that got hit very hard when the market got hit recently have recovered the best. Now, if we have another leg down, they're going to take them out again. But right now, names like Google, which is acting really well here, the auto parts retailers like Advanced Auto Parts and O'Reilly Automotive and AutoZone acting very well. Under Armour and Nike, that's kind of a little group. You can add Skechers to that also. That's acting well. But really, after that, there's not many groups right now that are really in bullish mode. I'd say we're in a little bit of recovery mode right now after the recent drop, and I can't really go further than that. I need a few more cards coming out of the deck. And I gather one of them is going to be tomorrow.
So let's talk about a little bit. I like how you already jumped into some pockets of strength right now.
Yeah.
We got some news coming out this morning from Beverage Industry. Anheuser-Busch InBev is, allegedly approached fell over SAB Miller. Any thoughts on that?
I actually liked the food, drug, beverage, tobacco, household product stocks for a while, but they topped out about 5-6 weeks ago, so we're not really even looking at them right now. When you get takeovers, you'll get some sympathy plays. I tend not to play things like that. And just keep in mind, when you're dealing with a lot of these mega cap companies, I'm looking at Pepsi right now, earnings 0% growth, sales growth -6%. I look at the Anheuser-Busch, earnings down 24%, revenues down 9%. I'm a big believer the fundamental reason why a stock goes up and goes up over time, strong earnings, strong revenue growth, and I do not think a lot of these companies have it. I think you're going to see mergers because they can't grow organically right now. They got to go after somebody else, and that's because these companies are so big. So I expect more of those, but which ones beats the heck out of me and at what point, don't know.
All right, Gary, let's move on here. Chris S. Tax in the chat here chiming in. Aren't there patterns in a bear market as well? If you could see the upturn before the bumps, can't you see the dip on a bear market just as well as a bull market?
Absolutely. Look, in my home, I have printed out, it's got to be at least 5,000 charts from different bear markets throughout history. And I got news for you. They simply all look the same over a good period of time. The topping out process that we just went through was classic. I was talking about it day in and day out, both on my radio show and on television, also in my commentary, that I use this example that if there's only 100 stocks in the market and 100 stocks are in an uptrend, and all of a sudden 20 of them break down, you now have headwinds. Then what if 50 break down? you now have a kind of flat market. And then what happens if 70% of stocks start breaking down? You're getting in trouble. And that's exactly what went on. And my best recommendation to people on bear markets is watch the 10-week / 50-day moving average, because what will typically happen in a bear market is a stock or a sector or a market will top out, break below it, stay below it, and over time that moving average is going to start heading south instead of heading north, and every rally gets contained as they rally into it at ever lower prices until the bear market is over. And anybody can email me, and I'll give them a list of charts that I have printed out that they can go back on and look at that are just classic in nature. And if you go back to the oil stocks of the last year, it's just classic bear market action. Every time they rallied up to the declining 50-day moving average, they'd hit it, sell off, party was over again, and that's really the definition right here. The reason why I stated recently why I thought that the down leg was over for now is because something else showed up, and that was that big, gigantic washout day. But I'm not so sure it was the low. I think it's more of an A low, and we'll see what happens. But most definitely, if you are somebody that can study how bear markets work and sidestep them, you are way ahead of the game. The last bear market, we were flat in our accounts while the market was down 56% just because of those studies.
Just moving on, we do have the Fed meeting, and I was just earlier on the show I was discussing, I could care less what happens in the meeting. I just have levels in the market right now. I think you have one of the best technical setups in the S&Ps. You've had the dip down, you've had the rally back, you've had this clearly defined resistance here, basis the December contract, 1983.50. That's your major resistance. Get some closes above there, then I think you might have some big money scrambling to get back in. But to me, I mean, it's a lower risk short at this level, and I think it's really hard to get bullish until you clear those rebound highs. What's your thought?
Yeah, look. There's a few. Here's some weight of the evidence along with that. There's really no leadership. The new high list, I think, is like 5 names that were meaningful. And really, I'm not seeing what I call real oomph-like volume as we've been moving up here recently. I can conceive that if the Fed does not raise rates, we're going to get a pop to the upside. I can also think that that may be a little suck-in rally where people get, we're in good shape now, and they just sell it right back off. Because I do not believe you top out over a 5-6 month period, have a major breakdown, and then days later the bearish phase is over and we're off to infinity. I don't think that's going to happen. And as I mentioned, the 50-day moving average, I'm looking at the S&P right now. The 50-day moving average was at 2,100 about 4 weeks ago. It's now down to 2,040, and that just happens to be where the big breakdown was.
Yep.
I don't see why it couldn't get there. I'm not sure it will, but I think any rally from here, I am what I would call suspicious at this point in time, and I pretty much agree with what you had to say, and I'm going to let this thing run its course. I think we have to get past the Fed and the nonsense we got to deal with once they come out with it. I think that lasts a day or so, but I'm, kind of sort of getting my short sale targets out, and we'll see what happens. But at this point, you must wait to theirs is set and done.
Right, and if you look at that old support at the 35 level, 2040 that held up for 3 or 4 months, if you don't think that's going to be resistance on a rally, then you maybe need to study one of the 5,000 charts Gary has at his house. Gary, thanks a lot. You covered everything and more on the show today. We really appreciate having you on, and we're going to get you back on the lineup real soon.
Pleasure would be mine, and
go Mets.
Going Mets.
Yeah.
Thanks, Gary.
Have a good day. Thank you.